Do you believe we're on the precipice of a recession, as a lot of people believe? And what are you doing for your clients? What are you advising them to do to protect their portfolios?
Well, Frank, I think we're sort of at the beginning of what is going to be the most anticipated recession in probably modern history. Everyone expects the recession, and that means that most people already have their portfolios prepared for it. You heard the guests talk about being lots in cash and lots in short-term treasuries. And we see that in our investor portfolios. People are scared, and they're scared of two things. And one, it's less so about the recession, but more so about the fallout from a potential debt ceiling problem where the U.S. government doesn't pay its bills on time. And we all understand, having gone through that in 2011, that what happens to markets. And so what I believe is a lot of people should be investing actually more aggressively right now, because markets, I think, are adequately priced for a short and shallow recession. And what markets are probably missing is that in this particular cycle, that consumers are so strong and their leverage is so low that it is very possible that consumers are what bring us out of this recession very quickly. So I think consumer discretionary. I also think technology, it's actually in the reverse of what a lot of people are doing. People should be thinking about 6 months down the road about when the consumer powers through what will be a recession. But what you see on the other side is strong housing, strong labor markets. A strong U.S. consumer can fix a lot of problems in the economy. And we have that particular scenario manifesting itself right now. You can see it in the data.
Okay.
Consumers are strong, and they're going to continue to stay that way.
All right, so you have a lot of faith when it comes to the consumer, but we keep hearing Fed speakers saying that there may be another rate hike coming. Obviously, the goal of that is demand destruction. It's taking some of the buying power away from consumers. So what do you believe is going to happen at the next Fed meeting? And if there is a hike, does your thesis still hold true?
Well, a lot of people, I mean, the data are still out, but I believe the Fed will pause. And the reason I do is because they're sort of giving us that indication now that the data that came in this week, PPI and CPI, are not so hot that the Fed cannot justify a pause. And in addition to that, the Fed has raised so far so fast that now the tertiary effects, like the banking issues that we're facing, only get worse the higher that the Fed raises. And so I believe that the Fed will pause, and they do not need to continue raising rates throughout this year. I think that most people, I think if markets think that the Fed is going to reverse course and start cutting rates in 2023, they're sorely mistaken. I think it's going to be probably mid-2024 before that happens.